All right, welcome back to the deep dive. You know, anyone who follows markets knows you can feel like you're drowning in data,
Oh, yeah.
just trying to figure out what's actually important
It really
for
is.
making trading decisions.
Absolutely.
Right, you've got news articles and social media, just this constant flood of information. It
Yeah,
can be really overwhelming.
it is the speed and the sheer volume of it. It's hard to make sense of it all.
And that's exactly why we're diving into this really interesting research project today.
Okay.
It's using AI, specifically LLMs, to help sort of cut through that noise and get those
Interesting.
real valuable insights for trading.
Yeah, I'm curious to hear more about that.
So it's like having this super sophisticated tool that can basically read the market's mood. And we're basing our deep dive today on a paper called An End-to-End LLM Trading System.
Okay.
It outlines this whole trading system
Uh-huh.
that's driven by these advanced AI models.
Wow, that's ambitious.
Our goal today is to break it all down for you. Explain how this system works, what makes it potentially revolutionary in finance, and how it's different from the way trading has traditionally been done.
Sounds good.
So consider this like your express lane to understanding the whole cutting-edge world where AI and finance are merging.
All right, let's get into it.
Okay, so let's start by unpacking this.
Okay.
What's the core problem this research is trying to solve?
Well, they identified a big one, right?
Mm-hmm.
Financial markets are notoriously unpredictable, but there's a big driving force behind them, which is sentiment, the collective feelings and expectations of everyone involved. The problem is a lot of the tools we have right now, they struggle to really capture sentiment in real time, especially from all this data we have coming from news and social media.
Okay, so you're saying those traditional methods, and they aren't really keeping up with the market's emotional state.
That's exactly right.
Yeah.
They're often too slow. And they can miss the nuances in how people express themselves.
That makes sense, because sentiment isn't always just black and white, right?
Yeah. Exactly. There are all these shades of meaning that traditional models might miss.
So what's the alternative? How are LLMs being used to address this issue?
Well, the researchers are proposing this really interesting system. It's designed to use LLMs to analyze and understand sentiment in real time from various sources like financial news and social media.
Okay, so it's gathering information from a bunch of different places
Yeah.
and trying to get a more complete picture
Yeah.
of how the market's feeling. So it's not just about labeling something as good news or bad news.
Right.
It's digging deeper than that.
It's much more nuanced than that. You can understand context, implications, even sarcasm, things that those simpler models can't pick up on.
Wow, so it's almost like an AI that can actually read between the lines.
That's a good way to put it.
Okay, so what exactly were the goals here? What were the researchers hoping to achieve with this system?
They had a few key objectives. The first was bringing together those different data streams, so combining financial news with social media to get a more complete picture of sentiment as it's happening.
That makes sense. You'd get a much richer understanding by seeing what's being reported alongside what people are actually talking about.
Exactly. It's about getting the full context.
And what was their second objective?
The second one was using LLMs for text summarization, because the amount of data out there is just overwhelming.
Right.
So the system can actually condense all that information into bite-sized pieces.
So you don't have to sift through
Yeah,
endless articles and social media posts.
precisely.
That's super valuable, especially in trading, where time is of the essence.
Absolutely.
And what about the third objective?
The third one was integrating those sentiment signals with traditional technical indicators.
Yeah.
Like SMAs, RSI, stochastic oscillators.
Okay, so just to recap for our listeners, SMAs help identify trends. RSI helps determine if a stock is overbought or oversold. And stochastic oscillators look for turning points.
Yeah, you got it. And the idea is that combining those with sentiment can make for a much more powerful trading strategy.
Interesting. So it's bringing together these different types of analysis
That's
to create a more unified approach.
Exactly, a more holistic view.
Okay, so we've talked about the goals. Now let's dig deeper into why LLMs are better than those older sentiment analysis methods.
Sure.
What are the shortcomings that LLMs can overcome?
Well, as we mentioned, those older models, they struggle with things like irony and sarcasm. They take things very literally. And in finance, that can be a big problem.
Right, because a statement could sound positive, but actually be intended sarcastically.
Exactly. And LLMs are much better at picking up on that because
Right.
they can understand the context and the nuances of how language is used.
That makes sense. But are any LLMs good enough for this task? Finance has its own unique language, so wouldn't you need a model that's specifically trained on financial data?
Absolutely, that's crucial.
Hmm.
The researchers highlight FinGPT as a prime example.
Yeah.
It's been fine-tuned on financial data, so it's much better at understanding the nuances of financial language and sentiment.
Okay, so FinGPT is a key player here. Now let's dive into the system's technical approach. How does this whole thing actually work?
They designed the system with a modular workflow, which they illustrate in their paper with a diagram. Basically, it takes raw data, processes it using LLMs and those traditional indicators, and then generates trading signals in a way that's easy for users to understand.
Can you walk us through the main steps?
Sure, it all starts with what they call user interaction and ticker submission. So a user would input the stock ticker they're interested in via a dashboard.
Pretty straightforward. What happens next?
That triggers the next step, data collection. The system then gathers real-time data from different sources.
Okay, like what kind of sources?
So for stock prices, they use FinHub's ATI, which provides live price data. For financial news, they use the News API. And for social media, they specifically focus on Wall Street bets on Reddit.
Wall Street bets, that's an interesting choice. They're known for being quite vocal.
They are. It's a very active community with a lot of strong opinions about the market.
So the system is pulling in price data, news articles, and Reddit posts, all in real time.
Yeah, that's right.
What's the next stage?
The next stage is data processing. This is where they clean up the data and organize it. For the stock price data, they calculate something called VWAP, which stands for volume-weighted average price. It helps smooth out short-term price fluctuations and gives you a clearer picture of the overall trend.
Okay, and what about the text data from news and Reddit?
For that, they aggregate it and summarize it, and then feed that summarized text into FinGPT, which analyzes it for sentiment and assigns a confidence score.
So VWAP for prices, FinGPT for sentiment. Starting to see how these pieces fit together, what's the next step?
The next step is sentiment analysis and signal generation. This is where the sentiment scores from FinGPT are combined with those technical signals.
Right, the SMAs, RSI, and stochastic oscillators that we talked about earlier.
Exactly, and they use a specific set of rules to combine those signals and generate a final trading signal, whether to buy, sell, or hold.
So the system isn't just relying on sentiment, it's integrating that with those established technical analysis techniques.
Right, it's a more comprehensive approach.
What happens once that signal is generated?
The next step is back-end processing and integration. This is where they manage all the data streams and make sure everything is running smoothly.
So it's all happening behind the scenes?
Yes, they use a technique called multi-threading to run everything concurrently. So the data collection, the processing, the signal generation, it's all happening at the same time.
And how is that data made available to the user?
That's where the front-end visualization and user feedback comes in. The user interacts with the dashboard. That displays all the key information, the VWAP, the sentiment scores, the trading signals. It's all updated in near real time.
So the trader can see exactly what the AI is recommending.
Precisely. They could even simulate trades
Yeah.
and see how the system would have performed.
That sounds like a great way to get a feel for how the system works in practice.
Yeah, it gives them a chance to test it out.
And what about the final step?
The final step is deployment. This is where they actually put the system into a live environment. They use a technology called Docker to create a standardized package, and then they deploy it on Google Kubernetes Engine, or GKE.
GKE, got it. So it's a cloud-based deployment designed for scalability and real-time performance.
Exactly.
Okay, that gives us a solid understanding of how this system is built and operates. Now let's talk about how they evaluated its effectiveness.
Sure.
What did they do to actually test it?
They did two main things. First, they benchmarked FinGPT against other similar models to see how well it performs in sentiment analysis. And second, they back-tested the entire trading system using historical market data.
Okay, let's start with the sentiment analysis, benchmarking. Which models do they compare FinGPT to?
They compared it to IBM's Granite 3.0 and Meta's Llama 3.1. They used a publicly available data set, and they looked at metrics like accuracy, precision, recall, and the F1 score.
And what were the results? How did FinGPT stack up?
Well, FinGPT actually outperformed both of those other models. Across all the metrics they looked at, it had higher accuracy, better precision and recall, and a better F1 score.
So it sounds like it was significantly better at understanding sentiment.
Yes, especially in the context of financial data.
Why do they think that is? What gave FinGPT the edge?
They believe it's because FinGPT is specifically designed for financial applications. It uses a technique called LoRa, which stands for low rank adaptation.
LoRa, okay. What does that do?
It's a way to fine-tune a model without having to retrain it from scratch, so
Yeah.
it's more efficient. And it allows FinGPT to really specialize in financial data sets.
So even though those other models are powerful, FinGPT has that specialized knowledge of finance.
Exactly, it speaks the language.
All right, now let's move on to the back testing. How did they actually test the trading system?
They used historical data from 2022 and 2023 for 3 stocks: Tesla, Apple, and Amazon. They tested 2 different trading strategies, one that used sentiment signals from FinGPT and one that just used traditional technical indicators
Yeah.
as a baseline.
So they could isolate the impact of the sentiment analysis.
Right size.
And how did they execute those strategies?
They used a position-based approach,
Mm-hmm.
meaning they opened and closed trades based on the signals they were getting, and for the sentiment-based strategy, they actually varied the trade size based on FinGPT's confidence level.
So if FinGPT was really confident, they'd take a larger position.
Yes, that's right. And the baseline strategy just followed the technical indicators without any sentiment input.
Okay, so they're really testing what difference the sentiment analysis makes.
Exactly.
What were the key metrics they used to compare the performance of those strategies?
They mainly focused on the Sharpe ratio and the win ratio. The Sharpe ratio measures risk-adjusted returns, and the win ratio is simply the percentage of profitable trades.
Okay, makes sense. Let's start with the Sharpe ratio. What did the back test show?
The results were pretty remarkable. The strategies that incorporated sentiment, they consistently outperformed the baseline strategies across all 3 stocks and all the indicators.
Wow, so sentiment really made a difference.
It did, a big one. For example, for Tesla, using SMA crossover, the Sharpe ratio went from 0.34 to 3.47.
That's a huge improvement. It really shows the potential of sentiment analysis.
Yeah, it suggests it can significantly reduce risk and improve returns.
What about the win ratio? Did sentiment help traders make more winning trades?
Generally, yes.
Yeah.
The win ratios also improved when they added sentiment, especially for the SMA crossover strategy. With Tesla, the win ratio jumped from 32.2% to 57%.
Wow, so more than doubled. That's impressive.
It is, but it's worth noting that the improvement wasn't as consistent for some of the other indicators.
So it seems like the benefits of sentiment might depend on the specific indicators and maybe even the market conditions.
That's right. It's not a one-size-fits-all solution.
Okay, what were the main takeaways that the researchers highlighted from these results?
Well, first, it really seems like sentiment signals can significantly boost the predictive power of trading strategies. They capture information that traditional indicators miss, especially for volatile stocks like Tesla.
Second, they found that sentiment was beneficial across different trading strategies.
Although SMA crossovers seem to benefit the most. Third, the impact of sentiment might vary, depending on the stock. It seemed to have a bigger impact on widely discussed stocks, like Tesla and Amazon.
Makes sense. And finally, they believe this approach has real potential.
For investors to make better decisions and potentially reduce the volatility of their trading.
Very interesting findings. Now, what about challenges? Did they encounter any obstacles while developing this system?
The main challenges were around computational resources, processing all that data in real time, especially the sentiment analysis with FinGPT. It requires a lot of computing power, and they had limited access to high-performance computing.
So it sounds like a bottleneck in terms of processing speed.
Yes, and that's something they're working on.
Okay, so what are their plans for future development?
Well, they have several exciting ideas. One is to create a more customizable interface so users can define their own trading strategies instead of just using the preset ones.
So more flexibility for the user.
That's exactly. What else? They also want to expand the platform to other assets, like cryptocurrencies. And they're working on integrating brokerage accounts so users can trade directly through the system.
That would make it a truly end-to-end solution.
Yes, that's the goal. They're also looking at things like risk monitoring, position tracking, and better visualizations.
So it sounds like they have a lot in the pipeline.
They do. They're actively developing it.
This has been a really insightful deep dive. As we wrap up, what are the key takeaways you want our listeners to remember?
The main takeaway is that LLMs have the potential to revolutionize how we understand market sentiment. They can go beyond those traditional methods and provide much richer insights. This research really highlights the power of combining AI-driven sentiment analysis with technical indicators. And it underscores the importance of real-time data from various sources like news and social media.
Absolutely. We're just scratching the surface of what's possible with AI in finance. So here's a final thought for our listeners. As these AI-driven systems continue to evolve, how might they change who has access to sophisticated trading strategies? Just something to think about.
That's a great question. It raises a lot of interesting points.
And for anyone who wants to dive deeper into this research, the paper is called An End-to-End LLM Trading System. Thanks for joining us on the deep dive.
My pleasure. It was great to be here.